Good morning, Steve Free in Chicago with the morning grain comments. Well, happy Friday, everybody. Yesterday was a geopolitical day in which we saw the shock of the market following announcement that the president of Brazil wanted to impose a 20% income tax. Farmers basically stopped selling grain, and Congress has to approve the measure, which strong lobby opposition to that. But it probably will affect crushers more than exporters, especially multinational exporters, as far as the taxes are concerned. But we'll just kind of see down the road how this all plays out. Other than that, export sales data, beans commitments down 14% from last year. No China buying U.S. New crop beans. And when we look at some of the trade numbers, the trade's looking for old crop bean carryout of 350 versus 340, new 457 versus 445, and that's including a 52 bushel yield and a soybean crop of 4447 versus some previous numbers of 4450. So not a big change in production. First crop ratings Monday for the bean should be near historical high levels. We also noted that the China May soybean imports, 10.2 million tons, down 2 million tons from last year. It looks like their import number is going to be less than 100 million tons versus the USDA's 105. China believes they're going to import 95 million tons next year versus the USDA's 105. On the corn, export commitment up 34% from last year. We had good weekly sales. We also noted that there was some buying of corn, selling of wheat spreading going on, and some risk management buying in corn to cover any concern about weather. As far as the Midwest weather is concerned, it looks like you're going to see some warmer and drier conditions next week. There's kind of a quick, fast-moving ridge that moves across the Midwest next week. Not sure if this is a new pattern for the summer or if it's just something that's going to help the crops grow. We also noted that the ethanol numbers might be affected in Brazil because of the tax situation, and certainly the farmers would be affected by that in Brazil. Our Argentine harvest is 35% done, the crop at 46.5 versus USDA's 53. Down on soybean, soybean meal, soybean oil, palm oil, corn prices all higher. Corn at 3 weeks high. Wheat export commitment, total commitment looks like around 685 million bushels, down 35 from USDA's 720. There was net cancellations of the old crop, while new crop number sales are better than average, and so we'll see how that impacts prices. Also announced that Turkey is going to ban wheat import from June 21st to October 15th because they have a near record high supply. Funds right now short 20 beans, long 100 meal, short 40 oil, short 160 corn, and short 48 Chicago wheat.